All right, you are welcome back to my YouTube channel. This is Coach David Hephzibah. If this is the first time you are seeing my video, subscribe right now and also hit the notification button so that anytime I drop super amazing video like this one you're about to watch, you'll be the first to be notified. All right. Okay, so right now we've seen all share index going up trend since this year, and also there is a projection that all share index is going to hit or market cap is going to hit over to 200 trillion very soon. So let's check all share index right now before I even talk about the stock that we'll be talking today, right? Talking about today. So this is all share index, right? As you can see right now, all share is just break out from this resistance key level right now. All right, this is where I mark, and as you can see from 167,000 basic points, it has broke out resistance key level that I marked. So it has break out now from this trend line that I marked, right, and is on its way to 180,000. Okay, so which shows that Nigerian stock market is very bullish right now. So what we are seeing right now is that more money is entering into the market. We're having a lot of big investors, right, institutional investors entering into the market. But you need to be very careful right now. Even though all share index has hit 171,000 basis points, right, that doesn't mean that I should be buying every stock. So if you look at many stock right now, see that most of these stock are doing very well, especially stocks without good fundamentals. So whenever you are picking a stock, make sure you are very careful, because some stocks, if you buy it, to be able to sell it will be very hard for you, right? So that's it for that. So today let's even talk about the stock that we're going to be talking about today. So I have three Nigerian stocks for long-term exponential growth in 2026. So if you are looking for stocks that you need to buy for a long time, you need to watch this video till the end, right? Because inside this video I'll be showing you the stocks that have upside potentials for 2026 and even beyond, right? This is not just a stock for 2026 alone. It's a stock that you can even buy for your children. It's a stock that you can hold for as long as you are living, right? It's a stock you can hold for 15 years, 20 years actually. And I'm not just going to be telling you this stock. I'm also going to be showing you the step-by-step guide on why I call this stock a buy, right? We have a lot of people out there who are just telling you the stocks to buy, but they are not showing you why this stock is actually a buy. So I'm not just here to tell you why. I'm not just here to tell you the stock, but I'm here to show you step by step on why I call this stock a buy, and we're going to be doing that together, right? So please do well to subscribe. Okay. So these are one of my checklists that I put into any stock I want to buy. So anytime I want to buy stocks, these are my checklists. If the stock pass through this checklist and is 7/10, I'm not buying it. Why? Because there's a lot of opportunity in the market, right? So now the first thing I check before I even invest to any stock, there must be a defensive growth stocks, right? So when I'm saying defensive growth stocks now, I'm talking about stock that people cannot do without, right? So when I'm taking of long term, right, the checklist for long term stock pick, right? So I trade in the market also. I also invest for a long term. So most of my viewers or most of the people inside our community, they are more of long term personnel, right? But there are strategies to it. You don't just tell me that you are investing for a long term when your stock has done about 300%, 500%, and you don't want to take profit in the market. Let's even look at institutional investors, right? You see that most of these people, they take profit also in the market. So why are you not to take profit, right? That's a story for another day, actually. All right. So before I even call a stock a buy, they must pass through my checklist. If they do not pass, that means I have to pick another stock, right? Because there's a lot of stock out there. We have about 100 and close to 150 stocks, 150 stocks now in the Nigerian stock exchange. So if a stock is not doing very well, I jump to another, right? So this checklist is very important for me. So the first thing, there must be a defensive stock. Defensive, not just a defensive stock, but a defensive growth stocks. Meaning that these stocks, they are not just okay. When we say defensive growth stock, they are not just a stock that people cannot do without. But when you check their financials, when you check their revenue, their EPS, their price per earning, you see that there's a trajectory growth, there's a growth, consistent growth. That's one of the things I check. All right. So when we are saying defensive stocks, we are talking about stocks that even beat recession or inflation, right? They are stock that people can, they are products. Let me just use product. They are product that people cannot do without. If you have been watching my YouTube video, you see that I talk also about this kind of stocks, right? So whether there is a recession in 2024, we see inflation hitting around 34%. And despite that, even though a lot of people are shouting, what happened? People still hit, right? Even you watching me right now, you hate rice. A bag of rice was selling for around 100,000. We see, we shout and we hit, right? So those are the company that I personally recommend for my client, people inside our community, right? Meanwhile, before I even continue, let me invite you to our stock market masterclass, right? So when you join our stock market masterclass, this community is a place where which I show you step by step on how to be profitable from the Nigerian stock market, right? So you'll be learning how to buy stocks, how to pick a very profitable stocks in the market that can give you as high as 50%. Even this 50% right now is something that is the least. Some of our stock has done about 100% this year alone. Some of the stock I recommended has done about 87%, right? So immediately you join our community, you also have access to stocks that are buying immediately, right? You also have access to 1 year mentorship, direct 1 year mentorship with me. Okay, so let's continue. I'll talk more about that before the end of this video. Okay, so if you are loving this video already, please do well to hit the notification button, subscribe, so that anytime I drop super amazing videos like this, you'll be the first to be notified, right? So when we are talking about defensive store, we're talking about food, talking about gas, we're talking about beverages, we're talking about utilities, power, medicine, or you instead of that medicine, you can say healthcare or fuel, right? Those are stocks that people cannot do without in the market, right? People will make noise, people will fight, people will say, oh, the government is not favorable, but they will still go ahead to buy all these products, right? The product of this company, very, very important. And meanwhile, I must warn you, before you even invest into this kind of stock, you must make sure that their financials are very good, right? I don't want to mention any company right now, but there are some stocks that are also in the consumer sectors, right? And people last year, a lot of influencers say, this stock is a very good stock. One of the things I do is to check the back end, and when I check the back end, I see that this stock does is just pump and dump. It's just a stock that I will not even put my money into. And what are we seeing right now in those kind of stocks? They have been declining in price, right? Because it doesn't perform the way people expected it to perform. So you must be very careful. Even though most of these companies are producing products that people cannot do without, we must be very careful that you don't just pick it randomly. You must know the reason why you are picking it. Are they generating income? Are they in debt or not? Right? Debt to equity must be very, very. You must be careful to check debt to equity and all that. Right? So you can learn all this in our stock market masterclass community. Okay, so the other thing I shared is that there must be a hot demand product, right? Hot demand product, close to the first point that I said. There must be a product. Let me give you an example. Rice. Most people eat rice every day, right? Everybody take water every day. People brush their teeth every day. So you can't do without brushing your teeth in a day, right? So those products, they are very, very good. And when you find a company that understand the core operations, they are not just, some company, they might be telling you that they are into real estate, but they are doing other things. Look at what happened to ASU Savings, right? They are listed as microfinance bank. They are now acting as commercial banks. That's the reason they suspended them in the market. So you must be very careful of those kind of stocks, right? So let's go ahead without wasting much of our time, right? So other checklist that their revenue growth must be at least 20% in the last 5 years. You see that this is a lot of work, right? This is a lot of work. Their revenue growth must be at least 20% in the last 5 years. I want to see a trajectory. I want to see a consistent growth in their revenue. Then they must have a pricing power. Warren Buffett will always call it MOAT, the competitive advantage, right? So I'm not trying to be biased right now. If I mention MTN Glo, and Airtel. Probably, let's just say 70% of people will pick MTN, right? That's the competitive advantage that MTN has over other. Even though during there was a time last year, right, when they increased their data fee, you see that it is very hard for us to be able to migrate from one SIM to another because most people have know you with that kind of number. So it's very hard for you to be able to shift because most people have, some of us have been using our MTN for like 10, 15 years. So for you to now change because you see that there is a lesser offer on data or core credit, it's very hard. So the company must also have a competitive advantage. Or when they even increase their price, people don't have any choice than to take it, right? I remember in 2019, a Coca-Cola was selling for 100 naira. Even at 2020, a bottle of Coca-Cola was selling for 100 naira. Right now, a bottle of Coca-Cola is selling for 500 naira, right? Even though they have increased their price, because one of the things that company do is that for them to be very profitable, especially when they're having issues with their financials, they will try to increase their price, right? And most companies are very, they must be very very careful in that because if they have a lot of competitors, right, that may trigger their customers to go into to their competitors, right? So competitive advantage is very very key for me. It's very very key, especially when I'm investing for a long time. If I want to swing, if I want to do a stock swing, that I don't even have to know about their financials, right? I just do demand or supply. Once I see that a lot of people are demanding for stock, I can just buy and wait for it to go up. Then I can take my profit. But when I'm investing for a long time, I do a very thorough check, a very very thorough check. So they must have a pricing power. They must have an competitive advantage, which is very very important. If you're loving this video already, please do well to subscribe to this YouTube channel. Thank you. So let's move further. Let's move further. Let's move further. So their debt must be at least 1%, 0 to 1%, right? Their debt very 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 important. It must be 0%. Then their profit margin must be growing year on year. Their profit margin must be growing. Very important, right? Once they did not pass my checklist, I just go ahead and look for other stocks, right? So now I want to show you something. I just decided to give out this strategy to my YouTube subscriber because you guys are amazing, right? Normally, I'm supposed to give this this information to people in my community, right? So just imagine what you'll be learning if you join our community, right? So this is just a tip, right? So now what we're gonna do is to go to Financial Times. Just go to Google and type Financial Times. So once you go there, right, you're going to see what I'm going to do now because we are looking for stocks that pass through our checklist, right? Debt to equity, the profit margin. Then we are looking for stocks that have grown their revenue at least by 20%. We're also looking for stocks that have a pricing power, right? Competitive advantage, right? So let's dive in. Now we're going to go to Financial Times. Once you go to Financial Times, so you just go here, scroll up, then you click on country, right? Country, then you click on Nigeria, right? So once you click on Nigeria, then to show, then we go to equity attributes. So this is what I'm looking for right now, right? Now from there, you scroll down, then you go to add or change criteria. So what we're looking for now is to look for their growth, right? So we go to growth. Once we go to growth, we are looking for their earnings per share, right? Earning per share in the last 5 years. We click it, then we look for their revenue growth in the last 5 years, right? Their revenue must be growing year on year. So we are going to pick revenue growth for the in the last 5 years, right? We're also going to pick their earning per shares. Earning per share is very very important, right? Which means that how much is the company is going to pay you, right? After removing all their expenses, right? So you must also, as an investor, you must also think of this, right? So this is very very important. Then what we're going to do right now is to go look for their interest cover. So this interest cover actually means that for uh for the debt that they have, right? Do they have extra cash to be able to pay off their interest, the interest on the loan, which is very, very important. So for the interest, for the interest on the loan, let's say they are in debt now, the interest on their loan, do they have a lot of cash flow to be able to pay off that debt, right? So very important. So we're going to click on interest cover. We add it to it also. That for that interest cover, right, it should be at least 2, right? So then we'll go to growth rate. So now net income is very, very important for me. Net income, whenever I'm doing this, net income, we're going to add the net income in the last 5 years. Then also the net income, the current net income, right? So we had it also. Then we'll go to financial strength, right? I think, okay, we have done that. Then we'll go to management effectiveness, right? So return on equity, very important. Return on equity. So the return on equity will be net income divided by profit, divided by the equity, the amount of equity that the company has, right? Net income divided by their equity, right? That's it. So we just return on equity, then return on equity in the last 5 years, right? The reason why we are doing this, we want to see if their previous years uh as at or if their current year has outperformed their previous years. Very important, very, very important. So we want to see if the current year has outperformed the previous year. Very important. So what we're going to do right now is to go and begin to fill this, right? So for the EPS in the last 5 years, we can do 20. So I'll just do 20. Then for their revenue growth, like I told you here, it must grow year on year. At least their revenue growth should grow by 20%, at least 20%, right? So we just put 20. Their revenue growth in the last 5 years, we put 20. Then their interest cover. Remember I told you they must have at least double of the cash flow that can pay off the interest on the loan that they have, right? Very, very important. So you can just do 2, which is double. Sometimes it could be 3, which is very good, which make it very, very strong. So their net income, we can do 15%, right? Then return on equity, at least it should be 15%, right? Then return on equity in the last 5 years, we can just do 15. Now, what we're going to do now is just to weed out. Remember, I told you that there's a lot of stocks. We have about 135 or close to 140 stocks in the Nigerian stock market. So what we are doing right now is to be able to weed out those ones that are not profitable for us, especially with that now that we are investing for a long time. So what we do now is to click on go, right? So we wait for it to load to be able to screen out stocks that meet our criteria, right? Boom. You see now, see the stock that he bought. So he has Boa Foods, CWG, Unicell, and all that. So what I'm going to do now, we have about, how many do we have now? About 11, right? About 11 of them. But what we're going to do right now is to still try to weed out all these things, right? So for the net income, okay, I did not fix the net income. Can do 20. So we can do 20 for the net income. Then the net income in the last 5 years. Okay, we can just do 20 here. We can do 20 here, right? So now, okay. So let's try and weed it away. Let's try and see how many now. So see 11, right? So now this is what we're going to do on all these stocks now. Remember we said here that there must be what, a defensive stocks or a defensive companies, right? Stocks that are sell this stocks that companies that sell inelastic products that people cannot do without. So these are the criteria that we're going to use to weed out all this, right? This is what we're going to do right now. Now the first question we need to ask ourselves, Boa Food, right? here now is food, which means that it passed our checklist. So Boa Food pass our checklist, but that is not a conclusion. We can't conclude on that, right? Because the current earnings, right? The current earnings must be able to outperform the previous one, right? So now let's go to Boa Food. Even though Boa Food has passed through our checklist, which is food, but now we have to go here and check something. So their EPS has increased by 70% in the last 5 years. Their revenue has increased by 56%, right? Their interest cover 19%, meaning that they have about 19%. Remember, I told you that interest cover is the interest that they must be able to have an interest that cover up the interest on their debt. But now what we are seeing is 19%, which is very, very good. Remember, I said it's two. If you remember, I said it's two. At least it must be two. So this means that Boa Food has a lot of cash flow, a lot of money to be able to cover its debt, right? So which is very good for us. Then their net income in the last 5 years, 70%. Then net income in now year on year, right? The previous net income, right? Which is last year and now 90%. What are you seeing right now? You are seeing that even though their net income in the last 5 years was 70, but in the previous years now, see that it has even outperformed it by 90%, right? Then return on equity. Okay, so we are seeing return on equity right now. Return on equity 89%. Then in the last 5 years, 68%. You see now. So you see that even the previous one, the current one has outperformed the previous one, which is very, very good for us. So we are picking Boa Food. All right. Now let's look at CWG. CWG actually deal with software, right? Software. So it's just like when people are hungry and they have let's just say they have iPhone 17, right? They might have to sell that iPhone 17. Actually, when people are hungry, they are desperate, guys. So meaning that it does not CWG does not enter our checklist. Remember, I said that it must be a inelastic companies like food, gas, beverage, utilities, powers, and medicine, right? So even though CWG show up on our screen, we're not gonna buy it. Let's say their revenue has grown by 37%. Then let's see their net income. 181. They have a lot of cash flow, say that can even cover the debt, which is good. Their net income in the last 5 years, 111. Then their previous net income was 428.4%. Even though this company passed the checklist, but we're not gonna picking it because we are thinking of long term, right? We are thinking of long term. People can do without software. People can do without software. People can do without it. So we are not picking it, but Boa Food has passed through our checklist. Now let's go to Unicell. All right, these are software, so without even checking it, we know that they are out. So let's check Feedsin. Feedsin is a pharmaceutical company, healthcare, right? So let's check out healthcare, medicine, right? So you can choose medicine or you can just say healthcare, right? So I decided to write medicine here. So now you see that Feedsin enter into our checklist, but that does not mean that we are going to confirm that as a buy. So let's check their revenue growth, right? 43%, which is good in the last 5 years. Revenue growth 43%, right? The interest. Remember, I said it's 2%. At least they must have at least 2%, double of the money to pay for their interest. The interest on their loan 2.3%. It passed through our checklist. Now let's look at the net income, right? Their net income 69%. Then the previous one is 60%, right? You see now. So remember, I told you that the current earnings, the current performance must be greater than the previous one. So in the last 5 years, 69, but now it's 60. Then return on equity in the last 5 years is 23.9%. Then return on equity previous return on equity is 40%. All right. So partially we can just give you 90%. So we have Bua Food, but I'm really concerned about this net income. Actually, I'm concerned about it because it has not outperformed 5 years, right? So partially, but because of the return on equity, which has grown from 23% to 40%, we can partially say, okay, let's choose fixing, right? Remember, fixing, people are going to take drugs, people are going to fall sick, they'll take drugs. So these are the things. If you have malaria, you will know how you feel now. So these are stocks that people cannot do without actually, right? So if you're loving this video, please do well to subscribe, right? So now let's look at aviation, Nigeria aviation, which is NACO, right? So NACO now, does NACO pass through our checklist? Utility, power, no. Why? Because they have to do with airline. Remember what happened in during COVID, where people could not even fly, right? If the government decided to shut down our economy, it can affect this company, right? So NACO is no for us, right? And everything is good. Everything is good. Let's say return on their equity in the last 5 years, 61.3%. Then previous one now is good, but it's out of it because they did not say inelastic or they are not a defensive stock. So we are picking Boa Food, we are picking Fitsin partially. Now let's go again. Okomu Oil. Let's check Okomu Oil now. Okomu Oil. So you see now they are 83. So the interest cover is about 34. They have a lot of money, right? 34% to be able to pay for their debts, right? Which is very good for us. Then the return on equity, which is very good for us as an investor, because you need to know if the company is actually concerned about shareholders, right? You need to know that is this company concerned about shareholders? If all they care about is profit, and they don't even care about shareholders, return on equity will actually allow you to be able to know, because there are some companies they don't care about shareholders. Actually, they are even in debt, right? You don't want to invest into companies that are deeply in debt, because if those companies are in debt, they are obligated by law to pay their debt to force before even looking at their shareholders, people that invest into that company that bought their shares, right? So return on equity for me is very important, right? So meaning that how much am I even earning on that, which is important. So for Okomu now, we are seeing 74% in the last 5 years. But you see that it has the previous one now, the current one has outperformed the previous one, which is about 139. So we are picking Okomu, Boa Food for long term, Okomu for long term, then Fitsin partially. Then let's look at Presco also. You see that return on equity 55% the last 5 years. Then now 49%, right? Even though their interest cover is around 5.6, which means that they have 5 times of the interest to pay off their debt, right? Which is good. But this return on equity, for me, partially we'll just pick it, right? Then Sky Aviation show up on our screen. We already know that this is no for us, right? This is no for us, because if government shut down the economy, then we're gonna have an issue. Then Transpower. Does Transpower pass through our checklist? Let's see. Power, yes. Yes. So your gadget right now, you need an electricity to be able to power it. So power is very important, right? So we pass through our checklist. Then that's a very good one for us. So then transnational, then Vitafoam. This is amazing. This is really amazing. So they have about, for the interest cover now, they have about 5% to be able to pay off, which is good. Then in the last 5 years, their interest income 29.9%, but now it's 48%. right? This is very, very interesting. Their net income has grown by 3,656% from 30.1%, right? Which is very, very good. But Vital Form, does it pass through our checklist, right? Because of the competitive. So, for example, now, if Vital Form decided to increase their foam, let's say 4.5 bed is 5,000 naira, right? They have other competitors. So, we're not going to be picking that. So, for now, we are picking uh Bua Food, we are picking Feedsin, we are picking Okomu Oil. Then partially we can pick Presco, right? Which is good. So as you can see now, you see, we are picking here, we are picking Bua Food, we are picking Okomu Oil, we are picking Presco and Trust Power. So you see the way I was doing this step by step. So there's a lot of YouTubers out there who will just tell you, oh, go and buy this stock. Eh, Why should I buy the stock, right? So like I used to tell you guys, there's a difference between a content creator who is talking about finance and someone who actually understand how stock market works, right? This is what I do for a living, and by God's grace we have about over 400 plus people in our community, right? 400 people can never be wrong. So if you want to join our community, so what you just need to do is to open the comment section. Once you open the comment section, you will have access to more details on how to join our stock market masterclass, right? So you can do that right away. So before you go, I'm inviting you to join our wealth creation network, right? So when you join, you will also have access to our community. You'll be able to learn how to buy Nigerian shares, especially most of you watching right now, you are complete beginner in the market. You want to learn how to get registered, how to have a broker account, how to get registered, how to get verified. You also be learning that because we have a video course that teach you. You also have access to profitable Nigerian stocks that I are buying right now. We have about 12 shares right now that we are currently buying inside our close community, right? You also have access to our monthly webinar. Every month I hold a webinar where I show my community the kind of stock we are buying and where the economy is going, because whatever happened to the economy of a nation will actually affect their stocks, right? You see what happened in 2008. It is very important that we are very current. We are current so that we can have more currency, right? All right. So you also have access to our stock recommendations. You also have access to join our stock market masterclass community, right? We also have a WhatsApp where you can ask your question and we can assist you on how to get verified and all that, right? So if this makes sense to you, do well to subscribe, hit the notification button so that anytime I drop super amazing videos just like this one you are watching, you're going to be the first to be notified, right? So thank you so much for watching. There's a video pumping up on your screen right now. Do well to watch them, and I have a lot of videos on my YouTube channel, right? I have a lot and a lot of videos on my YouTube channel that can teach you how to invest in Nigerian and US stock market, right? So as you can see here, I have a lot and a lot and a lot and a lot of videos that can teach you and show you step by step on how to invest in Nigerian and US stock market, right? You can just verify my recommendation. You see that most of the stocks that I recommended here are uptrend already. Okay, so thank you for watching, and I will see you in the next video. Thank you so much.